All right, what's going on, everybody? Happy Friday. Hope everybody had a great day, learned something, got better, because that's what the goal is, just a little bit better every single day. So let's go over everything. Continued selling, not much of a surprise. And so, like I said, below the 50-day moving average here in NASDAQ, and I would get out of pretty much everything. I guess with the exception of Taiwan Semiconductor, I'm still in that one. But anyways, okay, so let's go over everything. So we'll start with some winners here. So Geo, I hit my price target up here right around 32. This is just a short-term price target. If this was a good market, I would have held these calls because this was such a I'll remove this. Because this was such a powerful move. This was like a 7% or 8% day. It was such a powerful move, and this still looks totally fine and really good. But just the market is just terrible, right? And so it hits my first price target like exactly 31.82. So this morning I got out of this pretty much first thing. Those were February 21st was the expiration, $25 strike price. I paid $5.05 for those, sold them for $7.05, which is a 37% gain, and really nice. I've been in these since, I believe, here. Yeah, I believe this day, and there was a lot of sort of chopping sideways. The gain of these would have been significantly more had this moved quicker, but the fact that it didn't is all good, because the way that I trade options is longer dated call options. And this one in this case was, longer. When I placed this, maybe 60 days to expiration, something like that. And right around 10% in the money. Right? So that's a fairly conservative call option strategy. And that's exactly why I do options trading like that. This is exactly why. Because if you had a shorter dated call option, by the time this move comes, you've already given up the premium and time decay. So, anything to learn from this one? I would say no. We'll wait and see. I'm happy with this one, how it worked out. How I was cutting my losses over the last week or so, maybe more like a couple weeks. And, Geo was fine while markets and everything were really bad, So, I stick to my rules and that's it. And so this worked out. So it's good to see you stick to rules. Whatever they are, whatever strategy it is that you use, so long as it is a profitable strategy, as long as it's a profitable strategy and one you're comfortable implementing, it doesn't really matter. I am always trying to get better, so it kind of matters, but there's plenty of different profitable strategies. So that's where I was going with all this, kind of long-winded. Yet to be seen. I still think this looks fantastic. This is a winner from the Trump trade that continues to be the winner that nobody is talking about. This is the after the election right here. This is huge. 14.15 closes at the dead high at 21, 22 something. It's only continued higher is given zero back. So shoot. I mean, if markets can turn around, look for this thing to keep rocking. And I also don't exactly know what that says, how to interpret. Is that a good thing or a bad thing that this present stock is rocking? But it is what it is. Okay, so there's that. And let's go over another winner and one that really breaks my heart. Just so heartbroken. Goldman Sachs. Goodbye, Goldman Sachs. You were loved dearly. It's a really, really, really interesting, crazy market. This box here that I drew, this is a huge volume after the election, gap up, and a completely orderly, normal consolidation, super bullish, break above this, but it never got any momentum. And then that was kind of the first clue of, after hitting a new all-time high and stocks really start giving stuff back is kind of the first red flag. Now, like I always say, anything can and does happen, so, I don't put too much emphasis on one single thing necessarily, but it's just things that accumulate in my head that I store away. So, and yeah, just crazy markets, right? So, all right here looked fine, right? There's clearly some demand, maybe a little shakeout going on beneath these moving averages, right? But today I said, yesterday, I guess. Oh, Wednesday. Man, this is like the second Friday in 1 week. Wednesday I said, if NASDAQ starts selling off from here, I'll get out of everything. And I did, with the exception of one thing, which I guess I already said, Taiwan Semiconductor. But so as this was rolling over this morning, get out of it. Goldman Sachs. So the average cost basis on this was $4.59 or something, and that was back here somewhere. Where are we? Yeah. So somewhere in this area. See, look, big break below the 50. But so anyway, then it sold at 5.62.66, so that's a 22.5% gain. So that's really, that's a good gain for sure. That's awesome. Yeah, kind of a bummer. Oh shoot, no, I've been in this since back here, 4.59. This is way higher. Yeah, so back here, 4.59 during the summer. And now, in terms of any lessons to learn on this one, it is being patient and allowing positions to work while not compromising any of your rules. So, yeah. I'm really happy with this trade. I stuck to my plan. I traded my plan. I really didn't want to sell this anytime soon. But, a break like this below the 50-day moving average and for how markets are and have been for a couple weeks, like 3 weeks, maybe going on 4 weeks now, you got to get out. So that's what I did, and I wish I had more to say about this one, but I don't. This will be a good study one. I go back and look through all my trades. So yeah, this will be a good one to look back at, and then also a couple weeks later, I'll see how things turned out with the positions that I entered or exited, and see if there's anything specifically that I can learn. So that'll be interesting to see what happens here over the coming weeks. But yeah, so that was the only other winner. And now for the losers. So let's go over to NASDAQ here. And, given this all this stuff that has been happening, and even prior, NASDAQ doesn't look so terrible, but I mean, even prior to this, I've been in so many trades that have not worked out, like XLF, back here somewhere in this whole area. So like a month ago is when things really, really started not working. So that's when, you kind of perk up, right? So you're like, all right, things are not working. You want to be super light in position sizing. So same thing here with XLP. I was in it somewhere like here, maybe this day, held it, here at the 50. And then just violent breaks below the 50. You had things like real estate. Yeah, look at this today. Jeez. But, so here this all looked good and fine and nice, completely orderly. And just gets blasted, XLB materials, same thing. I mean, just blasted. So all these things, they start adding up, and not in a good way, right? Dow Jones, heavy break below the 50-day moving average, heavy, and then living below it for a while. Russell, same thing, heavy break. So as all these things are happening, yes, this is still a bull market, and you still go after trades that meet your criteria. But I personally lighten up on the position sizing, as opposed to when things are really working, are really good, right? Like, here's a good example of right here after the election, nice orderly pullback. And then, I'm in this one here and was adding, so very heavy position sizing. And then I think like right here, I went after this again, somewhere right here, and then doesn't work out. So then you kind of think, okay, now, you need to lighten up, right? So just a whole accumulation of things, so that, anyways, this is just how my brain works. Hopefully that helps somebody. I don't mean to ramble there, but that is what has worked for me, and so I'll just pass it on. Okay, so where are we going with this? Oh yeah, so anyways, position sizing is light. So NASDAQ, my plan was anything below this 50-day moving average, I'm out of here. Right, so I'm in the leveraged NASDAQ fund with call options, and the first ones are where were these? February 21st is the expiration, $82 strike price, 504 is what I paid for them. 504. So those for 345, which is a 31% loss. And then the others were March 21st, $85 strike price, $8.40. Sold them $6.55, which is a 39% loss. 39% loss. So let's go over what we can learn from this trade. Now these, I had a really nice gain on these. These were all started right in here. And the thought had crossed my mind that markets suck. This is coming up into some sort of resistance area. And I should probably get out of them. So what that tells me is I did not have a solid plan going into this trade. I had a really good entry point, but no exit in mind. Kind of. I had an exit in mind, but not a conservative one given the market conditions. So I didn't have a conservative one. That's the lesson to learn. So let's look at this whole trade here because I remember this. Yeah, so, or was it back here? 510. Yeah, so any close above 510 on this day, when was this? The 2nd. And I was going to go long calls, and I did. Waited for a pullback above what I thought was some sort of trend line break or just some strength. You know, when I'm looking at these trend lines, and especially this one's kind of like shorter term, right? You know, this is over a couple weeks time frame. It's kind of just it just helps my eye a little bit. Longer time frame trend lines matter much more, right? So like this one matters a lot more. That has been intact since September. That has recently been broken. Then this one that's here for like a couple weeks. But so my plan was on any significant pullback, and I would add to that position, which is what I did. And those were all, and I added at a great spot. So those were all fantastic. Yeah, this was Monday. That was a great day, Monday. So that was okay to add here. That was okay. That was all okay. Now, maybe what I should have done, given the fact that this spot right here, I already was thinking this would be a good spot to exit given the market conditions. On any initial weakness, I could have closed out all of those calls. And so that, I guess, is something to learn. But the main thing, I think, with this is having a more solid target price, and especially a conservative one given a very weak market where lots of trades had not worked out. So that's what to learn from it. Okay, so that's CCJ. Here's one. Here's another loser. Yeah, just a wild market, right? I mean, just really wild. You know, like right here, this looked really, really good. You know, I thought about going after here, but I did not. I was going to give it some time. And, you know, gave it some time. And this looked like some sort of supporting action, and especially around this whole area of support, right? You know, like this whole area is just kind of obvious. And so, yeah, that day I got in was good. The following day, you know, very strong, but I said, whoa, it closed below the 50-day moving average, gave back a lot. That's worrisome. But then the very next day gets absolutely smashed, right? And then you get some decent supporting action here at the 200-day moving average, and then just smashed, right? So it's been a funny, interesting, you know, market. Things are a little bit funky. So now this one was a starter position. The way, I mean, if anybody's watched more than one video, they know that I scale into positions usually in thirds. But for how markets have been lately, the position sizing is like even less than normal. So, where's I going with this? Oh, so the average cost of those was $52.92. And this equity position is sold out of that at 49.34, which is a 6.7% to be exact, loss. So, something to learn from this is being a loser and buying a laggard. So that's the moral of the story there. Being a loser and buying a laggard. Bum deal. Now thematically, like, I've been talking about, I still like this over the next couple years, but there is this massive gap down here to fill. Ugh. So, okay, and then now let's go over something else that I did, gold. So, again, we have this sort of arbitrary trend line that, like I said, kind of helps my eye. Any sort of super master, a technician would probably scoff at this, right? But anyways, so yesterday, or Wednesday it was, I had said, nice, gold back above the 50-day moving average, and that could be something to go after. Well, today, super strong, right? So over the 50-day moving average, really strong day, so I'm going to go after it. Again, with light position sizing. So that's what I did, and so GLD is what I used. I'll show you where exactly. So right here. So yeah, like 7 in the morning my time. March 21st is the expiration. $249 strike price on these calls is the strike price, like I said. 705. Those are currently 720. So I have really no expectation over the short term of what's going to happen with this, if it's going to work out or not. I don't know. 50-50 meets most of my criteria. Not all of it, but enough so that way I will go after it. I could see this kind of pulling back here or whatever, and it still being totally fine. We'll see. I'm not gonna add to this really until I am proven right in this position. Or maybe some sort of great supporting action that I put. So those two, circumstances. But interesting how gold is now performing pretty well when the dollar has just been rocking, But you would love to see the dollar start selling off here. I mean, this would be a good place, sort of here at some sort of resistance area. So look for gold to perform well if that does, in fact, happen. Also, I don't, why is gold rocking again? What sort of, gold is viewed and traded and used as a geopolitical hedge, or geopolitical uncertainty. That is when it performs the best, and so it is a little bit worrisome as to why gold is now rocking again. When I thought gold would be dead. I didn't think gold would be performing well. And so that's a little perplexing. But we'll see if this starts a new, if this isn't even in a new uptrend, right? So, all this is now just theoretical. This could start a new uptrend or not, obviously. The only thing that I expect to happen is that something will happen. you know. So now let's go over all the in it. So that's Taiwan Semiconductor. So I'm still in this. And right around 207-ish or so is the average cost basis. I mean, this was pretty strong today. My hopes are basically zero, just given the weakness in markets. But again, I have my rules and I stick to my rules. So a sell rule for this has not been broken at all. And in fact, this is pretty strong. And so, I even added to this position today, right? You have some good, strong price action, heavy volume, while everything sucks. So this is showing serious strength. These are the times where everything is kind of falling apart, sort of. Not in the sense of like the bull market's over and now I'm looking to short everything falling apart, but where things are very not good, and so you look at equities or sectors or whatever that are performing well or that are showing strength, that is very significant to look out for. So Taiwan Semiconductor, something else that caught my mind, Meta. But anyway, so Taiwan Semiconductor, hey, anything can and does happen. So if markets do somehow miraculously turn up, look for this to work very well. But let's look at semis now that we're at it. So NVIDIA, this was like a 6% down day just 2 days trading days ago. And that was after hitting all-time highs. So we've seen what happens with equities that hit all-time high, they give up the all-time high. The probability of them continuing higher is greatly diminished when that happens. And especially, on one of the world's largest companies, I don't know what this was for them in market cap on this day, but, they're either like the first or second or third, whatever, world's largest company. So, a 6% down day in that equates to like, I don't know how many billions, right? So this is huge move, and is now back below the 50-day moving average. And then AMD just got smoked today, and it's a very curious thing that if you're trying to go after a semiconductor company, you would be going after AMD. It's just very curious to me, very curious. This has been below the 200-day moving average for a long time. And I know people that have been going after this. I'm just like, why? But, so anyways, this has been below the 200-day moving average for a long time, below the 50-day moving average for a long time, below the 21-day moving average for a long time. And so for this one to have a horrible day today is not surprising, given the fact it's been a laggard since markets were still ripping. So when they're selling off, the probability of it being worse is greater. So Taiwan Semiconductor, the strength in this today just really, really stands out. Semis sucked. Markets sucked. And the strength in this really stands out. Like I said, I have zero expectations on this one, but if markets turn up somehow miraculously, look for this to be good. Okay, now let's go over some good things here. So Meta is hanging on, showing some good strength today. Heavy volume. Let's see if we can discern where all this heavy volume came from and form some sort of opinion. I would say there's heavier volume on the up than the down. So that's good. So those are the good things here. So let's see, DraftKings. DraftKings had a good day. But yeah, so, this is a no-go for me personally. Let's look at oil. Wow. Oil had a really strong day. Until some sort of trend is formed, I'm not going to go after this at all. Bitcoin kind of... Oh, what happened? Sort of respected this 50-day moving average here for the time being. So that's good. At one point for the day, I think it was up. Well, I guess it did close up. Anyways. Yeah, so, like I said yesterday, this is still totally fine. We'll see what happens around the 50-day moving average. I'll wait for a better entry or whatever. Just kind of right now is just a no-go for me. Let's see what else was up today. So Uber, this is a no-go. You guys see here's another perfect example of giving up an all-time high. I was in this actually, and I caught this, and I was on vacay, and this is when I was in calls in this, and this was when Tesla, after hours, did their investor day, where they had like the robo-taxi or whatever, and everybody thought it was stupid and whatever, and so ironically, Uber benefited from that, and so did I. But I had actually closed these out because I was on vacation, kind of like first thing in the morning, really, and then went about my day. And then I saw the close and was like, "Oh, you idiot!" But anyways, so here back to the story is giving up all-time highs, and then the probability of things continuing higher is much less, So I think I did try this again, actually. Yeah, right here I tried this again. And then below the 21-day moving average, I got out of it, So this is a no-go. This is for sure a no-go. Below the 200-day moving average. And wow, this actually looks really, really bad. And kind of concerning, And this is why I believe moving averages are really important. Because take away the moving averages and you're like, this looks fine. This looks no big deal. What is this, a cup with handle, right? But with the moving averages, tells a completely different story, right? Like if there's any one rule to have, and have whatever rule you want, or listen or don't listen, but if there's any one single rule, it is never go long anything below the 200-day moving average, never ever. So, and clearly here, that this is exactly why. Like, so for example, you're like, all right, over the 200-day moving average, I'll go long. Okay, so bam, bam, whatever. Below the 200-day moving average, you are out. So you can get out here and then think, man, I should have stayed in it. And so then next time, boom, below it, and you think, all right, well, last time I got out, I felt like an idiot. And then you just get completely blasted, So So this is just about probabilities, right? So anything below the 200-day moving average, the chance of it working is just so much lower. So as of now, this is definitely a no-go. Eli Lilly. Let's see, Eli Lilly. Yeah, see, same thing, right? Whoa, this is like the first time Eli Lilly's been below the 200-day moving average for a long time. Wow, this has performed fantastic. Wow. I met some guy onboarding Eli Lilly at a hotel. Nice hotel. And right on the beach. And we're talking, whatever. What are you doing here? Are you on vacation? Yeah, I'm on vacation. What are you doing here? He's like, I'm onboarding. I was like, nice, man. For who? For what? What company? And he's like, Lilly. And I'm like, Lilly? He's like, Eli Lilly. I'm like, oh, okay, for sure, man. That's awesome. That's nice of them to put you up in this hotel, How long are you going to be here? He's like, oh, yeah, man. I'm going to be here for 2.5 weeks. I'm like, what? So, anyways, there's a story for you. A meaningless story, I guess. Other than try and onboard Eli Lilly if you want a really nice place to stay for training, I guess. Okay, but this is a no-go. This is a no-go. Below the 200-day moving average. Again, without these moving averages, this chart looks fine, This looks fine. But with the moving averages is a completely different story. So, let's see, anything else of interest? I haven't looked at Palo Alto Networks for a long time. Yeah, I mean, sometimes when there's nothing to really go after, you kind of are like, all right, here's the 200-day moving average. Here's a clear and obvious risk to reward. So basically what my plan is moving forward is quicker trades. So right here, right around a 200-day moving average, you could maybe get a day or two out of this with a clear and obvious place where you can say, I'm out. This trade's not working, So, yeah, that's it. I think Roblox is still looking good. Roblox is still looking fantastic. Really good, man. See, so again, just things like this, like Taiwan Semiconductor, Roblox, if things start turning up, look for these to perform well. Look at this base. This is insane. If this has been basing for 2 years. So that's a long time. And this could really, really go much, much higher than people expect. All right, let's go over indexes real quick here. Dow just horrible. I'm shocked. Really, I am. Horrible. But again, below the 50-day moving averages, things are a no-go, and this is exactly why. Dow Jones, IWM. And again, sure, sometimes it can work below the 50-day moving average or below a 200-day moving average or whatever. Obviously things can work. It's just the probability of it working is less, and that's all that matters. Again, so here, this is, respecting the 200-day moving average for now. There's a gap to fill down here. Well, that's a little scary, but this isn't that significant. 172 to 170. Not that significant. But This is respecting the 200-day moving average for now. So, not all hope is lost here. But, jeez, man. So, we went over a bunch of sectors. I got sidetracked over all these different sectors. So, we've gone over a lot of sectors. I don't need to go through those again. Communications, I wanted to go after this one. I was going to. And then this very next day was really weak. Just started the day. So, I didn't. And now it's below the 50-day moving average. So Meta. Okay, so let's go through the Mag 7 here. So Meta looks fine. Maybe it's the only one. Meta. Let's look at Microsoft. Yeah, I mean, you really don't want to see this rolling over from here, right? Amazon. It's sort of strong, I guess. I personally am not going to go out for this. I'm not a huge single stock guy anyways. So, I really just go after indexes. But Amazon, Tesla. Oh my gosh, my keyboard. I'll be stuck here for a sec. Let me do some quick repairs. Give it the magic touch. And we're back online. Okay, where was it going? Tesla. It's good to see it respecting 50-day moving average for now. If this can turn back up, that would be sweet. There is a gap to fill down here. Again, like the saying goes, all gaps get filled. Sometimes they take years, but I would say that's more of a rarity. Tesla, Google. Let's see how Google looks. It's okay, I guess. It's all right. So Google, Amazon, Nvidia. We looked at Nvidia, and I guess that's all of them. Maybe I should count them as I go. I probably forget a few. Oh, Apple. Yeah, below the 50-day moving average, right? I mean, these things it's been a strange market. It's been really, really funny because, all through here, when is this? Yeah, so 12.9. 12.2 basically was the end of the party times for me. And so seeing Apple really working as indexes were getting pretty weak, although I guess NASDAQ was okay. Or was it 12.6 that I'm thinking of? Maybe it was 12.6, 12.9, something. But anyways, somewhere around in this area. So as Apple was working really well, things in general were not working well in general. And just a bunch of sectors breaking down like we saw earlier. And so, I was thinking, dang, man, Apple's showing some serious strength. So, again, for this to happen is surprising to me. But, when markets are bad, see, here's the thing about having diversification, quote unquote, is not all equities move up together. But basically all equities move down together, basically, unless it's like some inverse ETF or whatever. But essentially that is true. And so what happens is you get diminished returns when times are good, but you still have crap returns when times are bad. So where was I going with this? Oh yeah, with markets being so weak, the selling I'm not surprised in, but I mean this is pretty big, right? 260, 236 in 1 week. 1, 2, 3, 4, 5, 2 weeks. Just wow. So now the plan moving forward, let's look at corn. Oh my gosh. Wow. Nice. Yeah, so again, any sort of meaningful pullback and I will be going after corn again. Again, for the first time in a long time. Yeah, since all through here, that was sweet. And then I went after corn again. And here, right here. I went after it here. Caught this move. And then, that was really good. And then I think I went after it somewhere else and failed. I can't recall. Maybe I got it wrong a little bit. But anyways, so corn something, look, so here we go. Here's something to look and kind of go after, right? Have on your radar, corn. Okay, nice. So this is acting good. That's a really heavy volume. While wheat is selling off, huh? So, let's look at copper HG. Yeah, so yeah, this is a no-go for now. So corn, yeah, just it's gonna be a lot of short-term trades. Maybe some more day trades. So we can go over day trades, as I have kind of not been doing those as much. So maybe those will pick back up a little bit again. We can go over those again. And then, corn. What's cattle? What's cattle? Cattle is what is cattle? LH? No. LH, LC? Oh, it might be LC. Live cattle. I think that would make sense. No. What? No, that can't be right. LC, HC. Dang it. I forget. Cattle is a good one. What is cattle? Oh, is it HE? That's hog. Lean hogs. Dang it. I forget. This is going to bug me so bad. Cattle. CLHL. I can't remember. Whatever. All right. So to go over our section, and then we'll call it of capitulation and elation. Let's start with elation. And an energy stock up huge. Wow. This could be something to look at. I wonder why. What was the news here today? Agrees to buy some other energy dealio for $16.4 billion, and market rejoiced as that. Wow. Ooh, yield search. Yeah, so we got to go over bonds again. In all seriousness, this is a must watch. If bonds continue to break down, things are going to get very, very ugly. So this is a must watch here. Again, this gap, there's a gap here that has been filled. So maybe that could be a saving grace. I have no clue. All right. And then capitulation would be, biotech. Wow. Okay. Biotech. I wonder why. Anything of significance for biotech. Let's see if there's anything. 1-8. No. Nope. How did Pfizer Moderna do today? Moderna gave back all of its gains from this 14% day. And then some. So, all right, well, that's it. Oh, dang, Caterpillar's down pretty big today. Yeah, you guys, how is this healthy in any way? So the real estate market is completely breaking down, and it has been. Banks now are breaking down. Bonds have been breaking down. Russell, Dow, materials, Industrials. Although I guess it's kind of hanging on at that 200-day moving average, but materials. Jeez. Home builders. I mean, look at this. I mean, this is crazy, you know. Caterpillar breaking down. Why? What is this saying? Is this saying this? Okay. We know for sure this is saying a majority of market participants, or those that have the ability to move markets, are getting out of the way of something. You know, it's yet to see if this will materialize or not. But as of now, this is what this is all telling us. Wow, yeah, see, crazy. So, let's see, is that it? Yeah, I guess that's it to talk about. Man, Caterpillar's really been pretty good stock over the years, huh? Wow, heck yeah, it has. All right, well, I hope everybody has an amazing weekend, and next week will be interesting. You know, I'm not going to be placing any new trades until some sort of trend is established, or perfect sort of like risk to reward area. I will be doing some day trading in futures, and so that'll probably be the majority of the time to go over in the video going forward. And I think people really like day trading. So maybe those ones will be much more interesting. Who knows? Yeah, that's it. You guys have a great weekend. Like I said, hopefully everybody is, you know, learning something, getting better, developing honing their strategy, whatever that may be, whether it's, you know, the mental game, some sort of, you know, technical analysis, fundamental analysis, qualitative, quantitative, whatever it is, honing your craft is something to be celebrated and getting better every day. So with that, let's have a kick butt week next week.